Gold scalping can be highly profitable, but without the right strategy, you can wipe out your account fast. Based on my 8 years of trading experience, I'm sharing a proven 1 minute gold scalping strategy using just 3 EMAs and the directional movement indicator to catch high probability trades during the London and New York sessions. Throughout the video, I will also reveal 5 key trading tips that will help you avoid common mistakes and trade more efficiently, so make sure to watch until the end. I'll also be analyzing the best setups with a high probability of success and also highlighting trades you should avoid so you can filter out bad setups and increase your win rate. Ready to refine your scalping game? Let's get started. Chart setup. We'll be using the 1 minute chart, so I will click on 1M to set the time frame. Indicators used in this strategy. For this strategy, we'll be using 3 exponential moving averages: EMA 8, EMA 21, and EMA 50. As you can see on my chart, I have adjusted the thickness of these EMAs, making the smaller EMA thinner and the bigger EMA thicker for better visibility. The other indicator we'll be using is the directional movement indicator, which helps confirm market strength and momentum. Don't worry about all these lines. We will keep it simple and easy to understand by making some adjustments. Next, I will show you how to add these indicators in TradingView. You'll click on Indicators, type EMA. You'll see Moving Average Exponential. Just click on it 3 times. Then after that, you're going to type DM for directional movement. So adjusting the EMA setting. Now let's set up the EMAs. Click on Settings for the first EMA. Under Inputs, change the length to 8. In this case, I clicked on 21, so its length is 21. But in your case, you'll be doing it EMA 8, 21, and EMA 50. And then click on Style. Under Plot, you can click on Color and Thickness. And once you're done, all EMAs are set up. Now we'll be setting up settings for DMI. All you have to do is click on Settings. You'll be unchecking DX, ADX, and ADXR. Only thing we are using is plus DI and minus DI. Under Inputs, I'm using default period 14. Click OK. So now it's a lot simpler. Next step is we are going to add a horizontal line from the drawing tools. Pick horizontal line and just click on the DMI. Next step, we'll double click on this line. We'll click on coordinates, and in the price, we'll just type 25 and click OK. Now our chart is fully set up. Next, we'll go over buy and sell setup rules. Before we dive into the buy setup rules, if you're finding this content valuable, please hit the like button. It really helps with the YouTube algorithm and get this strategy in front of more traders. And if you want more high probability trading setups, make sure to subscribe so you don't miss out. Now let's go over the exact rules for entering a buy trade. First thing is EMA alignment. EMA 8 should be on top, EMA 21 should be in the middle, and EMA 50 should be at the bottom. Second item is wait for a pullback. The price must pull back between EMA 21 and EMA 50. The pullback candle can be bearish or bullish with a long wick indicating bullish pressure. So like in this case, we do have a bearish candle between EMA 21 and EMA 50. So here's the example of a bullish candle with a long wick that pulled back between EMA 21 and EMA 50. As you can see, this candle has a long wick and it has a strong momentum. It has like a bullish, strong bullish candle. So we can consider it as well. Third thing is wait for confirmation. A bullish candle must close above EMA 8, as you can see over here, and plus DI line, DMI must be above 25 and increasing compared to previous candles. So if we look at the DI value, if we look at this red candle, DI value in blue is 26.7580, and if you click on this bullish candle that closed above EMA 8, value is 27.0095, and you can visually see as well that it is increasing upward. After getting these confirmations, next step would be enter the trade. So that entry will be after the bullish candle closes above EMA 8. We'll set stop loss a few pips below the entry candle. In this case, this candle below, few pips below this candle, and we'll set our take profit at 2x the stop loss for 2 to 1 risk to reward ratio. As you can see, this is our stop loss is over here. Take profit is at 2x of our stop loss. So this is how you will set up your trade. Now it's time for tip number one. Be patient, wait for a clean pullback, meaning the best trade comes when price pulls back neatly between EMA 21 and EMA 50, and avoid those setups when price barely touches EMA 21 and shoots up. This often results in false breakout. So the sell setup follows the same principles as the buy setup, but in reverse. Here is how to identify a high probability sell trade using three EMAs and the DMI indicator. So first thing is EMA alignment for trend confirmation. EMA 8 must be at the bottom, like here. EMA 21 in the middle and EMA 50 at the top. This confirms a strong downtrend. Second item is wait for a pullback. The price must pull back between EMA 21 and EMA 50. The pullback candle can be bullish or bearish with a long wick, indicating selling pressure. As you can see, price pulled back between EMA 21 and EMA 50, so it fulfills this condition. Third condition is wait for confirmation. A bearish candle must close below EMA 8 and minus DI line must be above 25 and increasing compared to previous candles. So as you can see, this bearish candle closed below EMA 8 and DI line minus DI line is right here and price is value is increasing. After these three steps, enter the trade. Take the entry after the bearish candle closes below EMA 8. Set stop loss a few pips above the entry candle. In this case, this is our entry candle. Our stop loss will be a few pips above this candle. And set take profit at 2x the SL for a 2 to 1 risk to reward ratio. So as you can see, this is where we set up our stop loss. Our TP was over here at 2x and price hit the TP. So tip number two, the confirmation candle matters. What it means is the bullish candle closing above EMA 8 should have good body size, or in case of sell candle, if it's closing below EMA 8, it should have good body size. Tiny candles or dojis indicate weak momentum. Strong closing candles meaning high probability setups. Since this strategy is designed for trending markets, it is important to trade during high volatility periods. I focus on the first 2 to 2.5 hours of the London session and around 3 hours of the New York session when liquidity and momentum are at their peak. Now let's analyze this high probability buy setup. The first step is to confirm that the market is in a strong uptrend. Here we can see the market is transitioning from a selling phase to buying phase. Right here it was selling. Now it is converting into buying, and we can see like moving averages are in the process of lining up. So now we should be seeing clear higher highs and higher lows as a confirmation for uptrend. So we can see price made a high. Now we do see a higher low compared to here. Now we are waiting for an other higher high, and there is an other higher low. So now that it seems like now all moving averages are aligned as well. So we are going to look for these kind of setups where we do see clear, clean pullback. So now, as we can see, all moving averages are lined up. The next condition is we are waiting for a candle to close above EMA 8, which it did over here. Now let's look at DMI. DMI for this candle, if you look on the over here, this area, we'll be looking at the value. It is 33.23. If you look at the previous value, it's 28.5. So it is strongly increasing. Plus, this is a momentum candle. So this is a plus setup, so we can easily take this setup. Just again make sure no matter how good the setup is, like be cautious like about like your risk management. Do not take more than 1 to 2% risk on a single trade. So as you can see, my stop loss is over here, a few pips below this candle. My TP is set as 2x. So in this case, price hit our TP. So it's just a matter of like following the trade setup and make sure we are seeing a good trending market whenever we are taking trade. Now we are going to look at high probability sell setup. Before that, I will share another tip. So tip number 3 is monitor market structure. Even if EMAs are aligned, always check for higher highs and higher lows for buy setups and lower high and lower lows for sell setup. If the market is ranging or failing to break previous highs or previous lows in case of sell, it is best to stay out. So here's the example of high probability sell setup. So we are looking into New York session. So before the session started, there's no significant trend. So market is kind of like in a zone over here. So now like New York session opened. So now we do see there were some news event. Because of that news, market really moved down over here. So now we can see it broke the low over here. It made a lower high over here. So now we are looking for another lower low, which it made over here. Now another lower high. So this is perfect right now because like this is how we want to do it. Like we want to have like a clear, strong trend where we do see a clear pullback. So we do see that bullish candle close between EMA 21 and 50. Even that bearish candle, like it is inside EMA 2150, but it has a strong momentum candle that supports the sell setup. So if you look at DMI value is constantly increasing over here. So if we look over here, it is 30 point, it's a 30.5229, and the value of previous candle is 28.8039. So according to our conditions, we can definitely take sell trade over here. So in this case, our stop loss will be few pips above this candle. It's a high momentum candle. So our take profit would be 2x of our SL. In this case, it did hit it. Just another pro tip, once your trade reaches 1x risk in profit, make sure to move your stop loss to break even. This way you protect your capital and avoid turning a winning trade into a losing one. So now let's go over a setup that looks tempting but should be avoided. The key reason the market is not making a clean pullback. In this example, after creating a new high, price is consolidating over here. We're not seeing a clean pullback that we saw in the other examples previously. So in this way, like we do see, like it eventually it pulled back between EMA 21 and EMA 50. Now here's a setup candle, and if you look at DMI, it is also above 25, barely 25.34. So if we take this position, so it's not going to be reaching our target of 2x. So we can set up our SL over there. So it is barely like 1.5x. So we should always avoid those kind of setups and always take a high probability setups. Here's the tip number 4, avoid trading during news events. Major economic news can cause spikes that hit the stop losses before price moves in the expected direction. So always check the news calendar before taking a trade. Now let's look at another setup that should be avoided, one that happens after a major event driven move. The problem here is not the pullback itself because we do see a clean pullback. It does not consolidate or anything, but the main issue is initial price movement over here. In this example, we see a really big bullish candle, likely caused by a major news event or high impact volatility. While it may seem like strong momentum, these kind of candles often result in erratic price action rather than a clean trend continuation. After this huge spike, the market does pull back into EMA 21 and EMA 50, but notice what happens next. So let's say if we take the position over here, then so it candle closed above EMA 8, DMI value is also increasing. Currently it is 28.102. But what happened afterward, like it could not maintain the momentum, and at the end price reverse. So that could hit our stop loss. So avoid trading right after major news events, especially when you see sudden oversized candles. Instead, wait for the market to stabilize and form a clean, structured pullback before looking for entries. Just another reminder, if you're finding this content valuable, please hit the like button. It really helps with the YouTube algorithm and get this strategy in front of more traders. And if you want more high probability trading setups, make sure to subscribe so you don't miss out. And here's the last tip of the day. So, hands off the mouse, avoid emotional trading, only enter when all conditions are met. Don't get tempted to enter early or chase trades, wait for confirmation. It will really save you a lot of money. Now you know exactly how to trade this 1 minute gold scalping strategy, from identifying high probability setups to avoiding low quality trades that can hurt your win rate. Remember, the key is to trade during high volatility, follow the trend, and wait for the right confirmations before taking an entry. Stick to the rules, and you will see improvement in your trading discipline and results. If you found this video helpful, don't forget to hit the like button. It really helps with the YouTube algorithm so more traders can learn this strategy. Also, let me know in the comments, do you prefer trading the London session or New York session for scalping? I would love to hear your thoughts. And of course, if you want more high probability trading setups, make sure to subscribe and turn on notifications so you never miss a new video. Thanks for watching, and I will see you in the next one.